Hello, everyone. Okay. Hello, everyone. Welcome to today's live section. So, welcome to today's live section. We'll be doing the basics of trading analysis today. So, still waiting for some people to join. Okay. Okay. Let me share my screen. No. Okay. Windows. Select. Okay. Okay. So, I hope everyone can see my screen. Today we'll be doing the fundamentals of trading analysis for all beginners because most of the times they might be missing out all this while without knowing what we are doing, what we are talking about. So today I'll be giving a fresh tutorial, starting afresh of what trading is all about. So trading is all about buying and selling, just the way we do on physical market, just buying and selling. You buy from Mr. A or you're selling to Mr. B. So that is how trading is. It's a whole lot of competition between the buyers and the sellers. So whenever you come into a chart like the one showing on my screen, it's always complicated because most people think it's magic that is being performed on this on the chart. So not knowing that is a very simple case. So before you start your trading journey, you should be always aware that there are wins, there are losses. So if you don't take your time, the losses will be more than the win, which will kick you out so early. So whenever you want to start your trading journey, make sure you have enough knowledge before you start your trading journey. No money is uh, too small to be lost in the market. Always know that you need to have a basic knowledge. So it to take you a step by step procedure, 1 or 2 months, years before you could arrive to be like, oh, I can actually trade on my own. But if you're a beginner, don't always be in a haste uh, to trade. Try to understand what you're doing before you start trading. So today, let's. This is a chart. The first thing on my screen is a chart. Uh, a chart. It's where buyers. It shows what the buyers and sellers are doing in the market. So uh, in the past, there was nothing to uh, represent the actions of buyers and the sellers. Before they use bar charts, pie charts, histogram to represent some activities of buyers and sellers in numbers. So, but it's at the time they innovated candlesticks, which is the one you're seeing on my screen. These are candlesticks, the red and green uh, stuff you're seeing on my screen. It's called candlesticks. So candlestick is being introduced to help buyers and sellers. So because these terms of buyers and sellers, whatever the buyers and sellers are doing in the market, it's being represented in this chart. So it's not a magic. And it's like the normal market. It's just like the every other market. When this person is buying, this person is selling. Oh, sorry. So presents the and sellers. So it now tells you that before you could be able to tell what is happening in the market, you should be able to analyze this called chart, these candlesticks. You should be able to understand what the market is saying by doing analysis on these things. So you don't just come into the market and you want to buy or you want to sell. It's always a competition, and you need to join the winning side. You don't just join any side you want. You need to join the winning side. If you're not joining the winning side, you will be losing your money because it's not only you that is controlling the market. So, having in mind that this chart tells the actions of buyers and the sellers, when you look at it, it has the red and the green candlesticks. These are candlesticks. Each of them is called candlestick. So having in mind that this tells the activities of buyers and sellers, so we have to know what candlestick is all about. So these are several candlesticks. Holy shit. So these are several candlesticks, and you have to understand what each of them is saying before you could be able to make predictions in the market. So today we're talking about candlesticks. We'll talk about the parts of a candlestick. This is how a candlestick looks like. Okay, so this is a candlestick. I'm trying to draw. Don't mind my drawing. I'm just trying to replicate whatever that you're seeing here. This is a candlestick. So this candlestick can either be red or green. It can be any color at all. The coloring does not matter. So what matters is what each of them represents. Like in this chart, the red one represents when the market is going down. Then the green one represents when the market is going up. So the coloring does not matter. Look, you can change the color by double clicking on each of these candlestick. When you double click on it, you see you can change the color to anything you want. You can change the color, the body of this. You can change the color to anything you want. So this is so This is how you change the color of the candlesticks. So the color matter, you can change it to any color you like. So talking, we'll have to talk stick. In a candlestick, it has different parts. We have, I'm trying to label the parts of a candlestick. So this is the body of the candlestick. This part called the body. That is, this center part is called the body of the candlestick. Here is called the tail. Here it's also called the tail. So So this is the general part of a candlestick. Then on labeling of these and this, you can be able to know the one that is the green one and the one that is the red one. So I will make it two. I have to duplicate. Right, so I have to duplicate this. Okay. So I'm trying to duplicate this because this part tells which is the type of candlestick, either the red or the green one. So this is the body of the candlestick. So the body of the candlestick has what we call opening and close. So if this is opening, open, close. So let me just read it from this trading platform. Okay, this trading view. Okay. And so the labeling of this side, the upside downside is the close. So okay, so now I'm done with the drawing of the candlesticks. So if a candlestick, this is a candlestick, this is a candlestick, this same labeling goes to this one, the body of the candlestick, the tail, or you can call it either tail or wick. Either you call it or wick, or some places you can call it shadow. So now the body has opening and close. this center part of it. So if the body opens at the lower side and close at the upper side, we'd say it's a bullish candlestick. We call it a bullish candlestick. A bullish candlestick. Okay, we call it a bullish candlestick. Then when it opens at the upper side and close at the lower side, we call it bearish candlestick. So we call it bearish candlestick. Is the bullish candlestick. What differentiates them is the opening and the close. So what differentiates them is the opening and the close. That is what differentiates them. So now we have the opening. The green one, which is this, is called bullish, and it opens at the lower side and closes at the upper side. Then the red one, which is this, it opens at the upper side and closes at the lower side. That is the difference. This is called bearish. You can also call this long. You can also call it buy. On this, you can call it short. You can call it sell. So all these are actually the name of these candlesticks. This particular one, this is the buy. We call it long or we call it bullish. That is the green part of it. Let me know if I could shade them. No. Okay, now the green one opens at the bottom and closes at the top. The red one opens at the top and closes at the bottom. So that is the red one, and which is the green one. And when you look at them, they have different sizes. They are bigger, some are smaller. So candlestick, it's bigger. Okay. Now, someone asked a question: if in a situation when you enter a chart and it has different colors, how would you identify the one that is bullish and the one that is bearish? Okay. If you're on this trading view, take your cursor to any of these candlestick. When you take your cursor on any of the candlestick, cursor being on any of the candlestick, look at the top at this area. Look at this area. You see, you have O, you have H, you have L, and you have C. So this O represents opening. The C represents close. If it's a bullish candlestick, the price at which it opens, it's lower than the price by which it closes. So if this is the opening price 97,000, this is the closing price 96,000, you just know that it's a bearish candlestick. But if the opening price is lower and the closing price is higher, you know that it's a bullish candlestick. When you go to a bullish candlestick, the opening price is lower and the closing price is higher. So that is the way to differentiate them. And again, when you squeeze this cream, if this is in another color, you look at the ones like they are coming down. The candlesticks coming down are the ones, even if they are of the same color, the only way you can identify them is to take your cursor and place on any of them. It has an information at the top. This area, look at this area. You have O, you have H, you have L, you have C. So this O means opening, this C means close. So when the opening price is lower, that means it's a bullish candlestick. If this is 97,000, the closing price is 96,000, meaning it's a bearish candlestick. When it's green, look at the opening price is 97,010. The closing price is 97,019. So this is a bullish candlestick, even if they are of the same color. When you take your cursor to any of these candlesticks, like take your cursor pointing at any of them, they will give you the details of each candlestick. So now, having to know your candlesticks, talking about they are not of the same size. The sizes determine the amount of buyers and sellers in the market. The sizes determine the amount of buyers. When a candlestick is big, it means that the amount of buyers in the market is big because it's a bullish candlestick. Our green candlestick is the long, the buy, or the bullish. So it means that the buyers in the market is big, or the volume by which they are buying is big. So if a candlestick is small, like this is a small green, it means that it's the buying volume in the market is low. So whenever they are small, the volume of buy is low. Then the red one, if it's big, it means that the selling volume is high. But when they are small, just like these ones, it means that the selling volume is low. That means the activities of the sellers in that particular market is low. Then if it's high, the selling, it means that the sellers' activities are high. So when the market is selling, that means if the market is going down, you say that the market is selling. If the market is going down, you see that the seller's activities is high. If the market is going up, the buyer's activities is high. So now this area of this candlestick, it has what we call the high and the low. This candlestick, let me label the other side. Uh, this area, this area. So this is the high, and this is the low. So the same labeling goes to this one as well. Just like there was no space, so I have to do it here. So the high means the highest price at that moment, the highest price the market went to. The low means the lowest price. So this is the opening and this is the close. Then this is the low and this is the high. All of them are parts of this candlestick. So now, being able to talk about what candlestick is all about, then would actually move to support and resistance. So this is just the basics of candlesticks, what candlestick is all about. Then we can talk about our support and resistance. Okay. When you look at these charts, when you look at these charts, you see there are areas by which our price change direction. Areas by which our price changes direction, which is if market is going up and change direction and start coming down, that point by which the market changes direction is called either support or resistance. This is what I mean. Looking at if market is going up and starts coming down, This point is called, so if market is going up and it starts coming down, this point is called the resistance. This is resistance. This is resistance. Resistance. So resistance is in the sense that it's resisting the market from going up. So invariably the market will start coming down. So again, if market is coming down and starts going up, this point is called the support. So the support, is it's aiding the market to continue to change direction and start going up. So this is your support, this is your resistance. So when you look at these charts, you see there are many places. From here the market was going up and start coming down and start going up again and start coming down. So at a point of each of all these places, the market was going up and down. There is what is called support and resistance. When you look at any of these points, I will take my path again. If the market is going up and start coming down and start going up again and start coming down and start going up and start coming down. So each of all these points, it's called, if it's above the market price, look at the market price, look at the market price. If this point is above the market price, it's called the resistance because it's resisting the market price from moving above it. So this is the resistance, each of all these points. This is the resistance. This is the resistance. Then the lower side is our support. This is the support. This is your support. All these places I'm marking is your supports and resistance. And what happens at support and what happens at resistance? If market is coming down and if there is a support in that area, it will look to start going up. And if market is going up, whenever it meets a resistance, the market will start coming down. So all these points in time causes, so all these points causes market to change direction, and you have to mark it out whenever you come to the chart. You have to mark it out. They are called support and resistance. So anytime the markets change direction, that particular point is called either support or resistance. Now is the direction it changed coming down or going up. If it changed direction coming down, that means it's a resistance. So what it means is that if here is a resistance, let's say here is a resistance and here is support. That means whenever market is going up again and meets this resistance, it will start coming down. And if markets decides to come down again and meets this support, it will start going up. So this support will continue pushing the markets up until it's broken. So at any point in time, when this one starts coming down from here, it creates another resistance in this area. So when market is changing direction, it means that there is support or resistance in that place. If there is no support or resistance, market will continue moving in one direction. What I mean by market moving in one direction, look, market is moving from here to this place. It means that there was no resistance, so market was simply moving in one direction. If there is no support or resistance, market will continue moving in one direction. But when market meets a resistance, it will look to change direction. It can change direction or continue moving, but a resistance is a region resisting the price of the market from moving higher. then a support is stopping the market from moving lower, then the market will continue, we bounce at a support. So when the resistance is an opposing force, then support is aiding. So when this one is opposing, this one is aiding. So that is how you identify your support and or resistance. It can be a lot in a chart. You can see a lot of support and resistance in a chart. At any place there is change in direction, that area is a region of support or region of resistance. Whenever market comes back to that region again, it's looking to react. Market will need to react if it comes to a region of support or a region of resistance. Look, maybe this area I talked, this area is not clear. Let me go to another area that is more clear. I need. So this is a region that is more clear. So in this place, I will use a bigger. Market was coming down from here. Okay, and started going up to this place. Started coming down. Started going up. Started coming down. Started going up. Started coming down. Started going up. Started coming down. Started going up again. So it means there is resistance here that made this. There was resistance here that made this price to push down, and there was a support here that made this price to go up. There was a resistance here that made this price to push down, and a support here that made this price to push up. So if there is no support or resistance, the market will continue moving in one direction. Like in this place, market was going up, 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 up. It means that the resistances, we are not affecting it. So it's breaking through all the resistance. So on this area, there is area of resistance here. There is area of resistance here. This lower side, there is area of support here. There is area of support here. So you look, when there is support, when markets comes down and sees there is a support, it will bounce on it. When it goes up and meets a resistance, it will look to react. Look, it reacted here. The resistance was not enough to push the price of the market. So market broke through it, but it found another resistance that pushed it down, and it started moving up again. And when it got to each of these resistances, this forces there was not enough to push it. So it's continued going up. So when there is a resistance or support, it's only when market goes through it, that is when market will continue. If this force at that particular resistance is not enough, that means the market will continue moving in another direction. So if the force was not enough, the market will continue moving in the same direction. But if the force is enough, that means the market will change direction. So at any point in time, there is a change in direction in the market. It marks out your support or resistance. So I don't know if you got that. If there is any question, you can always type on the comment section. I would have to attend to it. So having known what our support and resistance is, so whenever you come to this chart, you can easily now, you've already known what candlestick is all about. I've talked about what candlestick is. Candlesticks are all these things you're seeing, and they identify the actions of buyers and the sellers. So then we've already known what is our support and what is our resistance. Our support is where the market starts going up, then the resistance is where the market starts coming down. It's as simple as that. So if you have any question, you drop your question. If you don't have any question, we talked about our candlesticks. We talked about our support and resistance. This is for beginners, someone that have not had any knowledge in what trading is all about. So I decided to do it today so that you people if you come to my page, there are other reviews that actually for advanced traders. But having to watch through this, we introduce you to the platform of trading. This is a platform of trading. So this is the first thing you know as a trader. What the candlestick is being called, you know what a support or what a resistance is all about. So when you already equipped yourself with this basic knowledge, you can be able to watch other of my YouTube videos that talked about demands and supply, still furthermore on support and resistances. So, but these are the basic knowledge you need to get about supports or resistance. So, if there is any question, then you drop. If there is no question, that should be the end of the class for today. Okay. There is no question I'm saying. So, if you have any question, maybe later, you can always drop it on the comment box. I would have to reply on the next video, or you find a way to write me in any of my social medias. Thank you very much for joining us today, and do have a wonderful week ahead and a wonderful night.